Good morning, everybody. Hopefully you had a wonderful weekend. So last week's 5Q tape breakdown, remember you get these every other week. If you're not getting them, talk to Tricia to make sure you're getting them, because these are great 5 or 10-minute reminders on how to become better communicators. So last week's was about don't just listen, spend 5 or 10 minutes verbalizing how you would fix the problem. So please take a listen to these. They're only every other week, and it'll really go a long way to boosting your communication skills. So does everybody hear me okay? Can I get some yays? I got somebody saying that they lost sound. Might just be them. Can I get a yay?
I can hear you just fine on this side.
Okay, so it's just one person.
Perfect.
Okay.
Yep.
So a couple of things here, 5 client questions and answers about today's investment environment. So the chief reason clients abandon their investment plan is the inability to deal with market volatility. The solutions to keeping clients calm in times of turbulence are communication, yay, education, yay, and consistently risk-managed investment approach, yay. So let's take a look at why they're skittish. But this is a great lesson because, guys, right here, what did people think? So from top to bottom so far, it's been we've had 27%. But from right here, and again, this is what happens, right? So right here, people thought what? And what was the press saying? What was the press saying after this? Oh, we've hit bottom. Look at it. We went down, 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 down. Now look at up, 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 up. We're out of it. When do we know the bottom is reached, guys? When will we know the bottom is reached? That's right, John. When will we know the bottom is reached? Yeah, 6 months after the fact. That's right. NASDAQ, 37%. So we're starting to see why they are concerned. So, and look at how long it takes. A month and a half to go down, 1 month it comes up, another 2.5 months to go down, 2 months to go up. See, this is the kind of bear market win right now, right? It's going to take how long before we get to the final bottom? So that remember back in when we had that fall, and was it 21, where in March it went just bottomed out, and then it came back 2 months later. And were some people convinced that we were out of the bear market at that point? Or yeah, most people were, but that was just the beginning, right? So here's the thing. We're hearing a lot that, hey, you know what, when the Fed starts hiking rates, the market does well, and does it most times. Look at S&P 500 returns during extended Fed hiking cycles, up 28%, up 20%, up 12, 10, 9, 9, 8.5, 8.3, 9.7.9, 7.7. So most of the times, does it work? Yeah. Does it not work sometimes? Yeah. So somebody tell me, the next slide is going to show you what's different. What is different? There's lots of things different, but I'm going to show you one thing that is strikingly different and easy to show people. What's different between the current Fed hike and these Fed hikes? Somebody's looking for a gold star today in today's class. Well, direction of rates, but the direction of rates, the Fed was raising rates on all of these. The Fed was raising. So what do you mean by that, Bert? You're close, Bert. You're on the right track. But the Fed was raising rates through all these periods and these periods. So what's different about them raising the rates this time? Okay, so here's the thing. If you guys don't know it, guess who else doesn't know it? If you guys don't know it, guess who else doesn't know it? Oh, John's got it. The clients don't know it. That's right, Mark. So this would be a great thing to show people. This is how they raise rates in all those other times. Here we are now. What's different about this rate hike, these rate hikes? The speed, right? And if they're raising the rates this quickly, what's the likelihood we're going to have a soft landing? What's the likelihood they're going to overshoot? Well, here's two different answers. What's the likelihood we're going to have a soft landing? Not very high, because when you raise rates this quickly, what's the likelihood you're going to overshoot? See, if you go gradually, less likelihood of overshooting. Guys, if you come screaming up to a stop sign at 15 miles an hour, and you come screaming up to a stop sign at 100 miles an hour, which one is more likely to overshoot the stop sign? Yeah, and where are we right now? At 15 miles an hour or at 100 miles an hour? So that's why we're seeing the markets change. So, and again, here's the bond. So are we out of the bond bear market? Does it look like we are? No. Again, and remember, when was I saying watch out for bonds, watch out for bonds, watch out for bonds? And what was the top to bottom loss for 20-year treasuries? Does that sound like a secure investment? Does that sound like a secure investment? So when we in our 21-point checklist say bonds are not part of your capital preservation portfolio, they're part of your growth portfolio and loss portfolio, were we correct? So this is a great lesson again, not for getting out of stocks, but you should never, ever, 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 ever be in what when you have access to FIAs? Bonds, right? Bonds, bonds, bonds. First impressions, the science of meeting people. And this is a strong handshake and assertive greeting may not be the best way. A strong handshake and an assertive greeting may not be the best way to make a good first impression. New research suggests that people respond more positively to someone who comes across as trustworthy rather than confident. And it's from Amy Cuddy. Now, anybody know what Amy Cuddy is? You've probably, if you're a big TED Talks follower, she's been on several times. But one of the things she's really known for is the Superman stance. What's the Superman stance? Power posing. It's when you can, before you go into, if you want to appear confident and you don't feel confident, what you do before you go into a meeting is you put your feet hip width apart, you put your hands on your hips, and you stand like Superman does. And it's weird, but guess what they found out? Does that or does that not work? When they've hooked people up to all sorts of sensors, does that or does that not work to calm people down and make them feel more confident? Yes, it does. And she was the one that discovered that, which is kind of a weird thing, right? It's a weird thing, but it makes people feel more confident. But she's done a study on first impressions. And in this interview, she was saying, when we form first impressions of another person, it's not really a single impression. We're really forming two impressions. We're judging them on how warm and trustworthy the person is. And that's trying to answer the question, what are this person's intentions toward me? And we're also asking ourselves, how strong and confident is this person? That's really about whether or not they're capable of acting on their intentions. Research shows that these two trait dimensions, warmness and trustworthiness, account for 80 to 90% of overall first impression. And that holds true across cultures. So how do you convey trust in a first interaction? There are a lot of things you can do. One is to let the other person speak first or have the floor first. You can do this by simply asking them a question. I think people make the mistake, especially in business settings, of thinking that everything is a negotiation. They think, I better get to the floor first so I can be in charge of what happens. The problem is that when you don't make the other person feel warmth towards you, warmth is really about making the other person feel understood. So guys, what is GOTS about? Agreeing, parroting, and empowering. What is GOTS all about? Making a person feel what? Understood. Getting on their side is all about, and so what should you be practicing? What is a 15-minute drill about? Is a 15-minute drill every day? Hopefully you're all doing it. Is a 15-minute drill every day about scripting? About the scripts? No. It's about getting better at GOTS. And why do we want to get better at GOTS? Because when a person feels understood, when they feel appreciated, when they feel like you think they're an above average person, they are going to be open to everything you have to say. They love you. They want to know that you understand them, and doing that is incredibly disarming. But are there times when it's better to project dominance and confidence? She says, I'm sure there are, but it's an empirical question and I'm not ready to answer it yet. So what's an example of how advisors act dominant and confident? What's an example of how advisors act dominant and confident? Over talking, I'd agree with that, Nick. What are the 4 things we should not do? What are the 4 things we should not do? And there's a rhyme I made up for it. What's the rhyme? Telling, selling, teaching, preaching. Very good. Telling, Bert, very good. Telling, selling, preaching, and teaching. When you tell, when you sell, when you teach, and when you preach, is that an example of dominance and confidence? I know more than you. So that's why we never want to do telling, selling, preaching, and teaching. Instead, we want to use motivational interviewing, which is letting them be the smart person in the room, not you. You're strictly a facilitator. So we'll see, but in general, she's saying dominance, confidence may work sometimes, but empirical evidence says that it's very, very rare. So it's very, very rare that we should tell, sell, preach, and teach. It says in general, I really think people make the mistake of overweighting the importance of expressing strength at the expense of expressing warmth and trustworthiness. I think this is a mistake. How can you possibly be a good leader if the people who are supposed to be following you don't feel that you understand them? And again, how do we know? How do our clients know we understand them? Because we ask questions, let them tell us, and then we pat them on the back with GOTS. Yeah, exactly. They tell us. How is it possible? No one is going to listen if they don't trust you. Why would they? Why should they? Trust open. So when you're telling, selling, preaching, and teaching, are they really listening to you? No. Trust opens them up with what you have to say. It opens them up to your strength and confidence. Trust is the conduit through which ideas travel. So why do we ask clients to trust? Who do we ask clients to trust with 5Q? Who do we ask them to trust with 5Q? Let's see if that's a trick question. Who do we ask them to trust with 5Q? Bert and Nick, you guys are so smart. So is John. Come on, everybody else. Who else? Who do we ask them to trust? Mark, you guys are so smart. We ask them to trust themselves because there's only one person that they trust, and who is that? There's only one person they believe in, who is that? Themselves. Because, that's right, Ben. So here's the thing. We get it, most advisors get it wrong because they go in thinking, well, of course clients trust me. I'm just there to help. Clients know you're there to help, but prospects, do prospects really think you are there to help them? What percentage of clients or prospects, not clients know you're there to help them. What percent of prospects think you're there to help them? Maybe 1%. And how much money does that 1% have? None. Because people with money, they think the only reason we're saying that their situation is not as good as it could be. The only reason we're saying they're paying too much in tax. The only way we're saying we're saying they're paying too much in fees. The only reason we're saying that their advisor isn't doing their job. The only reason we say things is to help them or to sell them. To sell them. That's why we can't tell, sell, preach, or teach. They must tell themselves because they believe themselves. They don't believe us. Does that make sense? That's why we do this way. Do 5Q the way we do 5Q with motivational interviewing. And again, if you don't want to make up the questions yourself, what do we have? If you don't want to know what questions to ask, what do we have? We have the scripts. We have scripts that have worked for 25 years. It's amazing. 25 years ago, when I wrote these scripts, I predicted what your clients would say 25 years in the future. And guess what they're saying? When we ask the questions, the way we ask them in the script, guess what the client says? Exactly what the client said 25 years ago. These are powerful things. Make sense? So we're going to talk a little bit about the scripting today, but we're going to talk about the non-financial scripting. Because I've had several comments in the last few months from guys or questions about the way we do the non-financial. So I want to clear that up today. So in the 21-point checklist, again, we have all the scripts here, and we have the crib notes. And remember, we said last week when we were talking about memorization, can you have the crib notes on each one of the pages of the 21-point checklist? Can you have the appropriate crib notes on the page when you do the 21-point checklist? Yes. In fact, what will clients think about you if you have notes on your 21-point checklist? What will the client think of you? That you're a neophyte, that you're a beginner, or that you're a well-prepared, seasoned professional? Yeah, that you're prepared, exactly. So we have the crib notes here, okay? And what we're going to talk about today is the end goal for each of the 200-point checklists. And we have the outline here. So the outline looks like this, because we want, if you do everything right, but don't get a client to tell you the end goal is the motive. The end goal is what we want a client to say about the current advisor, okay? The end goal is what we want the client to say about the current advisor. When we talk about risk versus reward, we want the client to say, you know what, my guy is charging me a high fee to put money in his pocket only. If I had just done a S&P 500, if I just did an index fund, I would have paid less. In fact, I would have paid nothing and had a higher reward to risk. Instead, he's giving me a lower reward to risk and charging me for that. Now, if they say that, what's the likelihood they're going to leave their guy? High, but we can't jump there. See, I used to just jump there because that's going for the throat. That's saying that guy is cheating you, black and white. But when I did that, they would when I jumped there first, they would have a knee-jerk reaction to protect their guy. Because at that point, does it sound like I'm attacking their guy or attacking them and their ability to make a decision? It sounds like I'm attacking them and their ability to make a decision. That's why you have to start slow and build to that point. But we have this outline that tells you exactly what you want a client to say at the end of each one of these scripts. And the non-financial, so for the introduction, we want them to say, this meeting is not about finding a solution. This is not about finding a solution. It's about finding out what you like and what you don't like. But if I say that, that doesn't work. So this is what you want them to say. This means not about finding a solution. It's about finding out what I like as a client and what I don't like about my current situation. And until I tell you what I like and don't like, you shouldn't be giving me any. Suggestions, because I don't want suggestions on something that I already like. Go ahead and give me suggestions on things I don't like. I also want them to say that I've done all the heavy lifting. Any changes we're going to make are going to be small and easy. What happens when they say these two things? If they say these two things out loud, what's happened to their fight, flight? What's happened to their uneasiness, anxiety? Gone up or gone down? Because I'm saying, listen, I'm not going to tell you anything today because I didn't come up with any solutions. Today is just about exploration, about what you like and don't like. And then the survivor's guide is just I need this document so I don't cause my family problems when I die. So neither of these two are about their current advisor. But then the rest of the non-financial, what we're doing is we're starting out with a foot in the door. So these first two, especially the survivor's guide, it's just a foot in the door. It's about, hey, you know what? My guy does not walk on water. There are some things he could be doing better. But is anybody going to leave their current advisor because he didn't give them a survivor's guide? No. But do they start to think, you know what? This would have been something nice my guy could have given me. You know, maybe he should pick up his game. You know, maybe he's not the perfect advisor I thought he was. Does it allow them to think that, though? See, that's the foot in the door. And if they think that, if they think, well, there's some small things he could do better, guess what it allows us to do? There's some bigger things he could be doing better. And so what the non-financial things do is the same thing you do when you start pounding a steak with a mallet. What are you doing when you pound a steak with a mallet? You're tenderizing it. So when you cook it, everything, it falls off the bone. It cooks faster. It cooks more tender. It makes making that steak much easier to the final product. So when we talk, the first thing we're going to cover, we do will and trust. With will and trust, do we really leverage that as well? How long do we spend on the will and trust, guys? How many minutes do we spend on the will and trust? 1 or 2. That's right. 1 or 2. That's it. No more than 1 or 2 minutes. Because do we want them to leave their current attorney? No. We want them to leave their current guy. And if they've spent thousands of dollars with their attorney, especially if they've done a trust, and we start batching the trust, what are they going to do? Defend it. Because I have a way to really slice and dice trust. And I used to do this. I used to start out the meetings by showing them how stupid their attorney was. Guess what that got? Did that really start the meeting off well? No. So I quit doing that. So I just basically touch on the will and the trust because I can't touch on the will, the power of attorney, if I don't at least touch on the will and the trust first. So I touch on it, I'm out. 1 or 2 minutes. That's it. That's it. But now with the power of attorney, That has to do with them having access to their money when they need it most, right? So that is definitely tied to their financial advisor. So with the power of attorney, what I want them to say is, any advisor that doesn't look at my power of attorney is a bad advisor. If I do the power of attorney and they do not say this, and I do everything perfectly, if they find out that their power of attorney doesn't work with Social Security, that they could be up the creek without a paddle, and boy, oh boy, this is a terrible thing. If they know that, but they do not say any advisor doesn't look at my power of attorney as a bad advisor, what kind of what have you accomplished what you need with that one? No, that's why this is the end goal. They must say it. And when I have them say it, do I have them say it? So this is a question that I get from people. Mike, you have them say it over and over and over again. Aren't they going to get sick of it? Well, if I say it this way, so why do I? Yeah, you got to reinforce it. You got to reinforce. That's right, Bert. You got to reinforce it. So if I just say, what kind of advisor would be if I didn't do this? What kind of advisor would be if I didn't do this? What kind of advisor would be if I didn't do this? If that's the way I did it, yeah, it's going to get repetitive. Do I do it that way, or do I ask the same question in a different way every single time? Same question, different way every single time. So they must say any advisor doesn't pay attention to the power of attorney, look at the power of attorney, make sure it works with Social Security, make sure it works with the bank, make sure it works with their current investment account, is a bad advisor. And how do I do that, guys? Well, we're going to talk about how I do that here in a bit. Medical power of attorney, we would lump these together. 5, 6, and 7, we lump together. Medical power of attorney, I always say, oh, shoot, that's awesome. It's awesome that you got medical power of attorney, but you're missing the most important part. Where is that? What is the most important part, guy? What is the most important part of the medical power of attorney? Yep, the quality of life directive, right. Because if you don't have the quality of life directive, then what you've said is what? I'm going to appoint you as my medical power of attorney to make all my decisions, and you're going to, all of that decision making is on you. I tell people I wouldn't wish giving somebody my medical power of attorney without a quality of life directive on my worst enemy, because you have sentenced them to just unbelievable stress and anxiety, right? Next one, filing the documents electronically, because if you don't do that, it's going to be in the hospice's favor, not yours. And the quality of life directive. And so then we, at the end of this one, then we lump all of them together again. So what kind of advisor I'd be if I didn't do a medical power of attorney, file electronically, and have a quality of life directive? Because what is the number one expense that you will pay or could pay in retirement? What is the one expense that could undermine your entire 40 years of savings? Medical expenses. So if I'm as an advisor ignoring the number one thing that could undermine all of your savings, what kind of an advisor would I be? So I know this is boring. Listen to my voice. I know this is boring, and you're saying, let's get to this sexy, fun stuff, the investments. And we will. But why do I cover this boring stuff? Because it can do what to your investments? If I give you the best investments in the world, but you ended up spending $500,000-$600,000 on expenses, medical expenses, what would that do to your investments? So what kind of an advisor would I be if I didn't cover this? Yeah, a bad one. And but Mike, this isn't really your job. And yeah, again, I scratch my head and say, you're right. This isn't my job. I don't get paid to do this. But if I started saying, hey, I only do things I get paid for, but ignore all the other finances, what kind of advisor would I be? Or would I be more of a salesman or an advisor? I'm more of an advisor. And are you looking for a salesman or are you looking for an advisor? I'm looking for an advisor. So I know this is boring, putsy, not fun to talk about, but why do I cover this? Because you'd be a bad advisor if you didn't. Guys, do you see how many times did I ask them or have them say anybody that didn't cover this is a bad advisor? How many times did I do it? Right there. 4. And did it sound like I was repeating myself? How many clients, I was answering that. How many clients, though, would have answered any differently than I answered playing the client? How many people are going to argue with me when I'm asking those questions? Most or virtually none. So do you see how you can ask that question 4 times? So with the power of attorney, I've asked it 3 or 4 times. With the quality of life directive, with these 3, I've asked 3 or 4 times. So now, how many times have they said it? 8 times now they've said, any advisor who doesn't look at these things is a bad advisor. Then I go to identity theft. I want them to say what? That they need that book on identity theft, or that I would be a bad advisor if I didn't cover it. And again, I apologize. I know it's another, here we are, covering another icky thing, putsy thing. I'm sorry. We did it with the power of attorney. We did it with the medical stuff, and now I'm doing it again. But why do I do this? I mean, I'm not getting paid for it. Why do I do this? Because you'd be a bad advisor. See, now I got them 9 times they've said it. Property casualty. Any advisor who doesn't look at property casualty is a bad advisor. Again, I'm going to do it the same way. And I keep calling back. So yet again, here I am, board. What are we in? We've been talking for half an hour now, and I haven't gotten to the investments yet. I'm still talking about this stuff, and again, I know I'm crazy and I'm boring you to tears, but if we don't do the important stuff, this stuff that can really undermine all the investments is fun, but if we don't do this kind of stuff, could it cost you thousands of dollars? And not just thousands, but tens of thousands of dollars. Yeah, no, I get it. So if I didn't cover this, and I know, we'll get to it. We're almost done with this boring stuff. We're going to get to the investment. So if I didn't cover this, what kind of advisor would I be? Guys, what's happening to my voice? Yes, I'm play acting. What's happening to my voice? Am I sounding authoritative or almost, hey, don't hit me. I'm sorry for covering this stuff. Don't hit me. I apologize. Don't yell at me. I'm apologizing. I'm talking lower, slower, and almost whiny. Please don't hit me. How many people will attack me when I'm doing that? Now, if I go in and say, so, as an advisor, if I'm not covering these things, because I think every advisor should cover them. If I don't cover these things, and it could cost you tens of thousands of dollars, what kind of advisor would I be? Now, what does that sound like? That I'm bragging? And if I'm bragging, what are they likely to do? Defend and get mad at me. Does that make sense? Umbrella, same thing. So if the client says this meeting is just about what I like and don't like with my current situation, their defenses go down. That's the intro. If they say, I need a survivor's guide to prevent my family from fighting, they think, oh, you know what, my guy could pick up his game. Then they said, if any advisor doesn't look at my power of attorney as a lousy advisor, 3 or 4 times, I'm missing the most important part of my medical power of attorney, and quality of life directive would tear my family apart, and I need all these legal documents filed electronically. Any advisor who doesn't look at those things is a bad advisor, 3 or 4 times. So now we're at 8. The client says, I need identity theft information. Any advisor who doesn't cover that is a bad advisor. And they say that 3 or 4 times. I need a P&C, and I need my umbrella. Any advisor who doesn't do that is a lousy advisor 3 or 4 times. Now, how many times have they said he's allowed, anybody that does not cover this is a lousy advisor? 9, 10, 12 times. And again, the reason we do this is, do you remember when you were a kid and you did the connect the dot pictures, where they had dots on the page numbered 1 through 57 or whatever? If there's only 1 dot on the page, do you have any clue what that's a picture of? The more dots they put on the page, the easier or the harder it is to figure out what that picture is, even before you start connecting the dots. The easier. And once you start connecting those dots, and there's lots of them there, it becomes you rapidly recognize what that picture is. And that's what we're doing here. If they say that the first time they say I'd be a bad advisor, are they even thinking about their advisor? And remember, have I even uttered their advisor's name yet or anything like that? Can they defend their guy? The way we're doing here, can they defend their guy? Have I even mentioned their guy? There's no way for them to defend it. So now, but I've attacked their guy 12, 16 times, 9, 10, 12, 16 times. And here's the thing. They can't defend their guy. And the first time I do this, they're not thinking about their guy. The second time, they're not thinking about the guy. But eventually, whether it's the 4th, the 8th, the 10th time, they start to think, wait a minute. wait a minute, Mike's not the bad advisor. Mike's not even my advisor. My guy's my advisor. He's not doing these things. He's the bad advisor. He's the salesman. All he's doing is selling me. He's not doing it. Do you see how that starts to go on in their head? Is that tenderizing them before I start to bring up the nuts and bolts of how the guy actually is taking advantage of them? Do you see why that's so important to do those things? So, and here's the other thing. When I'm doing these non-financial, what does research show about most women and what they think about their most women in couples and what they think about their financial advisor? That they do or do not like the advisor? How many women leave the advisor when their husband dies? A high percentage, a very high percentage, or a very low percentage? A very high percentage. When I start talking about all these things, what does the wife think? Finally, what? Somebody's talking about things that I'm concerned with. Somebody's talking about things that apply to me and my family. Somebody's talking about things that I understand. So by the end of the time we do non-financial things, who do we have on our side? She's thinking, finally, somebody gets me. I understand what they're saying. They're talking about things I'm concerned with. They're not talking about my head. They're actually patting me on the back when they're asking me questions and patting me on the back when I answer questions. We have the wife on our side. And we all know, those of us that are married and those of us that are no longer married, know that happy wife means happy life. So we have, first of all, we've tenderized that guy, and we've got the wife on our side. Now, again, the question I get from a lot of advisors, and that's why I'm bringing this up again, is, Mike, you're repeating yourself. You're having them say that a gazillion times. Like I said, 9 to 16 times. But if you do it the way I did there, how many clients are thinking, oh my gosh, this guy just keeps repeating himself? How many, if you do it right, how many people are going to be thinking, oh my gosh, you're just repeating yourself? None. None. And the reason we do it is because we've heard this before, and this is from Lenin, Vladimir Lenin. A lie told often enough becomes the truth. It becomes irrefutable. But here's the thing. If a lie told often enough becomes the truth, just think how much the truth becomes the truth if you tell it often enough. Then it truly becomes irrefutable, right? So how do we ask them over and over and over why, if I'd be a good advisor or a bad advisor? First of all, every time they answer a question, we got them. We either agree with them, we parrot them, or we empower them. And then we make sure we ask them the same thing in different ways. Did I do this? Did I ask the same question 4 times in a different way? Yes. Did I apologize for talking about boring things? Yes. Did I acknowledge it? Yeah, I know. I am repeating. It's not that I don't know I'm repeating myself. I am repeating myself. Do I acknowledge the fact that I'm repeating myself? So can they yell at me for repeating myself if I'm acknowledging that I'm repeating myself? No. That's how you got to do it, because a truth told often enough becomes irrefutable. And this is the way you're able to ask it over and over and over. Does that make sense? So is this helpful in understanding how you do the non-financial things? Do you see, just being an awesome at this, could you close a hell of a lot more business even if you were awesome just at these non-financial things? I've got insurance professionals who this is all they do, and they're in our top 10 in producers. Why? Because who do they get on their side? So are these producers closing 100% of people? No, but they're in the 70s, and when you're closing 70% of the people you get in front of, guess what? You can be in our top 10. Does that make sense? So today, remember, today is the start of our online workshop, where if you want, you can get on the call afterwards. Remember, the lines are going to be open. We can go back and forth and talk back and forth. I'm probably going to just talk today with a couple of guys who've been coaching with me for a while now, just so you can get a feel for how it would work. So if you can kind of be on the sidelines for this first one, and then going forward, you can actually be more involved. But this is going to be a back and forth. So these lines are going to be open. So if you can't pay full attention, but again, starting 5 minutes from when I hang up, we're going to get on. You should have received a link so you can get on these live workshops for those of you who want to be on these live workshops for working on the script. Today we're going to work on the non-financial. So, but again, if you're going to be on 100% attention, shut the door, turn off your phone so that you're not interrupting everybody that's on the call. Does that make sense? And again, these are optional. You don't need to be on it. You can be on one. You can be on all of them. You can be on none of them. That's cool. This is only for those people that want to be on. And really, the reason I'm going to tell you what we're working on is if you think you've got the thing we're going to be working on down, you don't need to be on that call. So today we're going to be talking on our online workshop 5 minutes after we get off the phone here is going to be about the non-financial. Make sense? Coolio. Well, thanks for being on. And those of you going to join me here in a few minutes, then I will talk to you in a bit. Thanks, everybody. Have a great week. Talk to you next Monday. Thanks.
And guys, just a reminder, if you're looking for that link, it's in the email that you would have received this morning that has the call link for today's coaching call that we just completed. It's in the bottom of that in purple, in kind of a very obnoxious purple color, in hopes that you won't miss it. It's also available on the website if you click into the coaching call topics and schedule. The link is available on the top portion there. It says Script Workshop Online, begins today. If you just, if you just go to underneath, Library, Mike, and then
I'm sorry.
Call topics and schedule. There you go. See, at the top section there, just scroll up just a little bit farther. There is a link underneath the Scripts Workshop Online Meeting, and then that green link right there, that's how you would go ahead and access it. And again, we'll start at about 5 minutes from now. So for today's call, it's going to start roughly around 9:45. That's a floating time. So it's going to be about 5 minutes after the end of each of our coaching calls. So, but that is where you can find the link. And again, that will also have come to you via your email today as well, this morning, in your reminder email. So hopefully that answers any other questions that I saw pop up. So
cool. Have a great week, guys. And those of everybody else, I'll talk to you in a few minutes. Thanks. Bye.
Okay, bye.